My guest today is Jeff Booth, and he is very concerned about war, a lot of blood, a lot of death, a revolution in the United States. Why? Because of the growing gap between the have and the have-nots. Those that are getting money and they're getting richer, and those that are getting poor. And why is it happening? Well, in his book, The Price of Tomorrow, which he wrote to try and avoid this war, he talks about how technology is making everything cheaper. But for some reason, we can't buy more of these cheaper goods. And the question is, why? The government is printing so much money. It's inflating prices on things. So we have to keep working more hours and more jobs to keep up. And this is going to cause a revolt. We talk about this in the interview. We also talk about, will the US dollar ever get pegged back to gold? And we'll have a pre-1971 sort of financial policy. Or will we see a new Bretton Woods? And will the dollar still be the global reserve currency? Or will the Chinese yuan take over or something else? We also speculate about, will the dollar ever get pegged to Bitcoin to build trust back into our financial systems? We look at all this stuff through a financial lens, but also a political one. How are political parties using this populism, this rage, this split between the wealthy and the poor for their advantage to consolidate power? And can that be undone? Again, the interview is a very good one. We talk about all things fiscal policy, Bitcoin, war, revolutions, politics, power, and money. Enjoy this interview with Jeff Booth, author of The Price of Tomorrow. Also built his own company to $500 million in market value before writing the book. We'll both be in the comments below if you have any questions all day here today, Thursday, guys. If you enjoy the video, click the like button, and I'll see you in the comments. Enjoy the interview. All right, guys, my guest today is Jeff Booth. He has recently, maybe not recently, actually, it's a couple months now, but came out with a book called The Price of Tomorrow, Why Technology is Key to an Abundant Future. And I was introduced to Jeff by my friend Preston Pish, who recommended his book. I dive in and I was just thrilled when I read the bio and said, oh, this guy's not actually an author. He actually built a tech company called Build Direct, built it to about a $500 million market cap over a 19-year period, and a whole heck of a lot of pivots, which we'll dive into. Jeff, I appreciate you joining me.
Thanks for having me.
So we'll ease into the book, but instead of starting with what do you do and what's the book about, I just want to pose a very urgent question to you, which is the following. When the election was happening in 2016, I was seeing so many tweets by many politicians, including Donald Trump, articulating that they're going to be tough on jobs and keeping unemployment really low. And if GM moves out of Ohio, GM's going to get the consequences. Even if the plant in Mexico is cheaper and produces cheaper cars for U.S. consumers, they're going to keep the jobs here. Why are politicians and government so obsessed with keeping unemployment low and high-paying jobs around?
That's a loaded question, but the only real scarcity is high-paying jobs. The technology is creating abundance everywhere, and every single government around the world is worried about the destruction of jobs, which is a logical consequence of technology. And going back and creating coal jobs is not going to solve that problem. Right. So it's not just Trump. It's every politician. It's every politician around the globe that is worried about the same thing. Technology destroys jobs. How do we keep them?
How do we keep them? Is that the right question to be asking?
Well, so you've fortunately read the book. I think we're asking the wrong question. Right. So if technology is deflationary and it makes things more efficient, maybe the question should be, how do we rebuild society so we don't need as many? But that question, it breaks people, right? Because we haven't grown up in that society. It's always been a growth society. Get more, try to you earn more over time. You pay back your debt with future dollars that were inflated away, and it's worked for a long time. And so we can't see that we're caught in this loop, and we're asking the wrong question. You said something to kind of that I'm not an author. I didn't write the book. I don't need money from book sales. I wrote the book because I care about my kids. I wrote the book because I care about the future world that we all grow up in, and solely for that reason. But entrepreneurs have an advantage, right? Entrepreneurs see the way something should work versus the way it works now, and they build to that. And a lot of times those entrepreneurs are chastised early on, right? Because they're competing against a system that doesn't work that way, and they're trying to create a new system. So instead of starting this from an economist point of view or anything else inside the existing system, if you step up above that and you look at it with fresh eyes, you could potentially see something that no one else saw, right? And so I think entrepreneurs always create the new world, right? And so from seeing that seeing that impact across a larger spectrum of a world that we're all caught in a loop of higher and higher paying jobs, which we can clearly tell there's not going to be net global job gain globally, right? Through what's happening with technology. If that's true, if you accept that's true, that there's not going to be net global job gain, then the existing system that we grew up in can't continue.
What does can't continue mean? When does the world get shocked into the moment when they say, oh, it is broken? We realize it's broken.
Well, all the evidence is there already, right? It's been, you talk about the polarization in political circles all over the globe. That's a consequence of trying to retain a system that doesn't work the way that it should, the way we grew up with. And so over $185 trillion has been added to global debt in the last 20 years to produce $46 trillion of economic return in GDP over that's per year. But the growth of debt is exploding. And when you grow debt at that rate, all you're really doing is pulling forward demand that then you have to pay for tomorrow. Right. So you're pulling forward demand and you're having to increase the amount of debt with each different step against prices that want to go down because of technology, jobs that want to go down because of technology. And when you do that, you're caught in an existing, you get caught in an existing trap. Asset prices go up. Those same asset prices that you're forcing to go up because of that creation of debt, then you have to bail out the people on the other side through UBI or something else because the prices of the assets are unnaturally high and people can't pay for them. So you're wasting money all over the place. And you said the signposts are everywhere. It's actually surprising that people can't see the signposts because we don't live. Maybe a simpler question is this: if the global economy worked, would we have to create 180? Would we have to juice it with $185 trillion of debt? That's before the crisis, right? That's and I think.
And we're just for context, we're recording here on Monday, April 27th.
Yeah, and so now you have worldwide you have $250 trillion. This is at the end of 2019, $250 trillion supporting a global economy of 80 trillion. That was when I wrote the book, and now what is it? Like, take a guess on what the global debt will be against what the global economy is. Right? You've just exploded the debt, and the global economy is lower. That debt, just the debt alone, is a drag on future growth, right? Because you have to pay it back. Now, the only way it doesn't become a drag on future growth and it becomes hyperinflationary is when, logically, governments destroy their currencies because they can't pay back the debt. But assuming they have to pay back the debt, somebody has to pay back. Taxes need to go up. And taxes going up will slow growth further, and we'll get more deflation.
Since 2000, $4 of debt used to drive $1 new of global GDP. When you take into account Moore's law and the advances in the technology over the next 20 years, so if we have another interview in 2040, Will the ratio stay the same or get worse? In other words, best case, can governments around the world print $4 to get $1 new of GDP, in 2040? So we're doing 500 trillion in debt and 160 trillion in global GDP.
Well, that's the question right now, right? So since the book came out and COVID, let's look at a micro example, right? Zoom going from 10 million users, what we're on right now, right? Going from 10 million users to 300 million users in a month and a half, right? Will the 290 million incremental users all go back to their commercial real estate? I think the answer is obviously no, right? Some will go back to commercial real estate, but everyone that doesn't reduces the value of commercial real estate. And reduces GDP as a function of all of this coming down. And those people aren't eating out in restaurants near the commercial real estate as much and everything else. So all that's happened is with COVID is we've accelerated the process of technology change, right? And that takes away a whole bunch of jobs faster. And so the feedback loop of that. So the answer to your question about what will governments need to do to replace all of that demand, it's actually unquantifiable. At some point, how many trillions of dollars breaks a system? At what point do you say you're pushing on a string, and this isn't working anymore? And so do you double? Do you triple that debt number? Do you quadruple that debt number? It actually doesn't matter, because we're already so far past the point of rescue that more and more debt is going to be ineffective.
So, Jeff, the ultimate thing I'm trying to work towards is, what is the moment where we realize this needs to be fixed, where people aren't being killed and there's blood on the streets in the form of a revolt, or the haves against the have-nots? Because here's what I keep coming back to. Now, this is true of all politicians around the world, but I'm most familiar with the US, so I'm going to stick there. When you look at the net worth of the current cabinet members, okay, none of them are have-nots, right? Hundreds of millions, sometimes billions worth of net worth. The system's working just fine for them. Many of them were entrepreneurs. They built massive companies, maybe in the financial space or other spaces, and they believe what they put in, the things they created, they earned, they made it. It feels very weird to try and take their wealth and redistribute, whether it's via UBI or some other form, to the quote have-nots. For them, the system is working perfectly. So why would our lawmakers try and push any change?
Change is coming no matter what, and whether it's these lawmakers or the next law. And I think the question, the prescient question that you asked is, does it come through revolt or revolution, or is it orderly? I wrote the book to hopefully convince enough people that we could create an orderly transition, right? An orderly transition with this much debt is going to be difficult. So let's go into that first. And it's going to be difficult because if you allow deflation to happen, the debt in real terms explodes.
Jeff, sorry, because we didn't start off by defining inflation, how you're thinking about it, this is a good moment for you. When you say let deflation happen, what does that actually mean? And then please continue.
Sure. So deflation is when the value of your money gets more valuable. Goods and services go down in price, and your value of money goes up. Inflation is the opposite. Your value of money goes down, goods and services get more expensive. It's not good or bad. It's different winners and losers, right? So in deflation, currency savers are winners. They can purchase more. With inflation, your asset holders of assets are winners. So we have a force that is bigger than any politician, and it created a structural change, and that force is technology, and that structural change is creating deflation everywhere. Yet policymakers are trying to drive inflation to protect against that declining prices, and through that lens, that makes sense. Because if you allow deflation to happen, then the debt, if you already have too much debt, then the debt explodes in real terms and value, and you can never pay back the debt. So that's where we are in the world right now. And that's actually why it's logical, not bad politicians, not anything else. It's logic. Some are bad, but it's logical to try to protect that system. They don't know. In fact, many of them don't know they're doing it. They grew up in a different world. I said this in a different interview, but for now, I think pulling it to real world examples and what happens in business gives people things they can hang on to. And so Blockbuster didn't have a bunch of dummies running Blockbuster, right? 9,000 stores. All they missed is how fast technology was changing. When people talk now and they say, why didn't Blockbuster see forward and buy Netflix when they had the chance for $50 million? Netflix at $50 million was a bad business. It was sending videos back and forth by email or by mail. And so Blockbuster didn't see the risk in that. It was when technology changed the game, and now you could download a movie like that. Blockbuster's advantage, 9,000 stores and all the attendant costs, turned into a disadvantage overnight. It was a noose hanging around their neck. So what they did in that mode was add candy aisles to their stores. Right? It's ludicrous. But
you're not a gumball and Twizzler kind of guy, Jeff.
But it's ludicrous in retrospect. So when you think, okay, we can solve this. We can solve this change in technology by adding candy aisles to our stores. But now connect that analog to what we're talking about. That's what governments are doing. It's ludicrous. We can stop deflation from happening. We can stop the progress to technology by juicing our economies and adding more debt when we know it's not working. So it's just as ludicrous. But again, if you go back to it, the Blockbuster executives weren't dummies. They were caught in a system that they couldn't see their way out of. And that seems like a plausible thing. And if you connect the dots there to the global system, all of our politicians grew up in that global system. So did we. And they're caught in a system that they can't see the solution because they're caught in that. So when you have, imagine the disorderly unwind, right? Imagine if today, I know there's a lot of talk about the Fed and everything else reaching in and butchering capitalism, which they are, right? But give them a choice. So what choice do they have right now? So if 2 weeks ago, $2.3 trillion went into essentially junk loans, but the junk loans against the commercial real estate is really like subprime loans in 2008, is connected globally. So if you let those fail and you write down commercial real estate to what it should be written down, and the real underlying price, and the connections around the whole entire capital system, the entire system goes through a hard reset. So there's no good choices right now, is what, because there's so much debt in the world. And instead of talking about first principles, what's actually happening that's created the structural change, and how do we create an orderly unwind instead of a disorderly, we keep reaching for the same say policy responses that worked 20, 30 years ago.
Jeff, taking a step back, I don't want to give the Fed an out. I appreciate your argument, which is they're stuck in a system. They grew up a certain way. I get that. But just last week, American Airlines CEO Doug Parker, right, announced he was accepting a $4.1 billion grant, not a loan, a grant from the U.S. government, of which $1.7 billion was a loan. So great, at least it'll get paid back, but with very little interest rates. Compare this to 2008 and TARP, which effectively that made the government money. When the banks paid these things back, there was about $3.6 billion in interest payments made, plus the capital. That money went back. So that's great. At least it wasn't a net loss to taxpayers. This American Airlines deal, Okay. And they're also going to apply for another 4.75 billion in extra loans. That's 10 billion out of the 2 trillion package CARE Act, right? That was passed, I guess it was 2-3 weeks ago now at this point. That's 10 billion there, of which a lot of it doesn't have to be paid back to the federal government. Why didn't the federal government say, listen, American Airlines CEO, if you're not going to take our $4 billion fully as a loan and pay it back at a good interest rate, oh, and by the way, also give us some equity in the company, right, to some degree, or some control provisions, then fine, we're not going to do a deal. Warren Buffett's phone is not ringing off the hook right now because the government's saving all the companies that he'd go buy. American Airlines could have gotten, if the government passed, American Airlines would have ended up in the hands of someone like Warren Buffett, which I would argue is potentially a better situation for American taxpayers. So why hasn't that happened?
So let's go back to 2008. And the only reason that money was paid back is because so much debt went into so much extra debt went into the system to keep artificially prices high and pull more forward demand. Otherwise, if you let the reset happen in 2008 happen, at the company that I founded in 2008, we couldn't transfer our LCs across the world.
What's an LC?
Letter of credit. Banks on the other side of the ocean wouldn't accept them because the counterparty risk was too high. The financial system was grinding to a halt, and the Fed stepped in and tried to save it. But by saving it, they artificially created winners, and they artificially created losers. And let's go through some of the winners, right? So you rewind to that time, and now we'll take it forward to answer your question. But when you talked about Trump in that time, before he was elected, he is a winner out of that system because no asset prices could collapse to what the underlying value really was. And so all of the people with assets, commercial real estate, everything else, you protected them from going down. And then rents went up, and the whole bunch of people that got their pocket picked are wondering what happened. So if you had savings at that time, and your savings were destroyed in real value, right? And if you had assets at that time or debt that you just we papered over it, and you kept pretending the system still worked. Now, fast forward today, we're in the exact same system with bigger numbers, and so American Airlines, some of the airlines, there's been a lot of talk about right now. Why didn't these people save money, right? Why didn't these executives? Why didn't they save for a rainy day? And they're right, because when you have zero bound interest rates and you're sitting on cash and the government is destroying the value of cash, what are you going to do with that cash? Right? You're going to juice returns. And so we have a structural problem. And not addressing that structural problem is what's happening. You're absolutely right. Should that happen? Should you bail out these companies across the board? No, you shouldn't. You should let them all fail, and the people with cash will win. But if you actually pull the string on what you just said, that is a hard reset for the global economy. A hard reset. Cash explodes in value. Right now, the U.S. dollar is going up in value because governments around are all trying to get cash. Every company is trying to get cash, and the U.S. currency underlies 80% of world trade. It's the only reason it's going up in value right now. It will go down on the other side of this. But so the bailouts, and what industry isn't getting a bailout right now? Right? The Fed is the market, right? With the stock market is an illusion. Today, it's completely detached from reality of fundamentals.
I guess the question I'm trying to push you on is, I get it worked for someone like Trump in 2008. I get there's inflation targets. I think, we get how, quantitative easing and money printing benefits some and not the others. But there's also right now, there is a lot of money sitting on the sideline. I mean, Charlie Munger and Warren Buffett the other day on CNBC are basically saying, we're not getting any phone calls right now. And he goes, something is very wrong here. Why are two great business people and great investors not getting phone calls when a lot of big companies that they would love to get involved with are in trouble? And the reason is because people are looking at the government as the kind of idiot in the room that's going to save everybody, which ultimately comes back on the taxpayer. And I just feel like they're at some point, it's almost like the frog boiling in the like there has to be some point where someone says stop, and I'm trying to figure out what that breaking point is going to be.
Well, so they've gotten themselves into a trap that they can't get out of it.
They assume the government or the corporate.
The government, Fed, all government central banks around the world, they're caught in a loop, and they can't. And they are the market, right? There is no free market right now. A free market does what it does what you just said. People with cash, they wait for these times and they buy for pennies on the dollar. And why people aren't holding cash or as much cash in a traditional market is because the interest rates they're going negative. They're going to be very negative. We don't live in the world that we grew up in. Right? So a lot of the talk about living in that world, that is not that it's like, if you read what a lot of the economists are saying and everything else, and how this should work, looking backwards at models that were built for different times, you keep getting back into this cycle. You just nailed it. Technology is deflationary, period. If that is true, right, and it's getting exponentially more so, then almost nothing else matters, right? So if look at your phone, right? Your smartphone is 13 years old. Everything on it, all the apps, it's all free, right? That same technology is moving into every single industry at blinding speed.
Well, hold on, Jeff. You have to give the delta here. You're going to age yourself a bit, but 1988, your first phone bill was for how much?
My first phone cost $2,000.
Yeah, and you put this in the book.
My first phone bill cost about the same, right?
$1,200, right?
and that was that was all it did is made phone calls, right? And I thought that was fantastic. Look at your phone today, what it does, and the power that you have in your phone. By the way, that $1,200. In 1988, it was inflation adjusted. The real value of those $1,200, right? Think about what that would be. So what my phone costs me now, for $50, you could buy $50 a month. You could buy last year's phone, and it has immense power. The amount of things that are on it, from my guitar tuner to everything else that I don't buy anymore. Camera, I don't buy anymore. I don't maps, Waze, but that same technology is moving everywhere.
So guys, I want to use this moment to underscore, in case you haven't caught on to Jeff's point, when he says technology is deflationary, this is what he means. Things like the phone and advances, Moore's Law is a piece of it, but there's other advances that allow us to get, much cheaper utility today, more for our money today than we did back in 1988 in this phone example. That's, Jeff, what you mean when you say technology is deflationary, and that will always be true.
Yes. So again, every one of the companies I'm involved with is taking technology and across their businesses. Just about all those businesses right now are setting records. It's a super exciting time. But if you add that up against, instead of just one company, two companies, 5 companies, and everything else, if you add what's happening at the technology base layer across industry, it's impossible not to see how fast this is happening across the world, and that breaks our current economic model.
So 2 follow-up questions on this. There are some people agreeing right now, and there are some people watching disagreeing because they're thinking, wait a second. my drug, the cost of this pill that I really need for my chemical imbalance that helps me balance out my copper has quadrupled in price over the past 10 years. There are certain areas where this deflationary nature of technology has not resulted in cheaper prices. Address that. Why isn't this the case across all industries?
Okay, let's go into and some are manipulated higher, right? Some are and right now, most are manipulated higher by the same function of currency that we're talking about, right? Why is real estate going up in value? Because you're pulling. Everybody's trying to take their money and put it in a store of value that doesn't get eroded by inflation. So you take your money out of there and you put it in a house. And if China is going to devalue the currency, which they will devalue the currency, right? Everyone from China says, I got to get my currency out of China and I'll put it in New York real estate. The New York real estate goes up. But that game is happening all around the world, and that massive easing. Ask this. So if you didn't have $185 trillion of additional easing, what would real estate look like? Right? If you didn't have...
Wait, Jeff, what would it look like?
It would look deflationary, just like everything else. If you didn't have this, and then your savings would be going up, and you would be able to buy more for that. Everything would look like that. You would follow the natural trend of what prices wanted to do. It's not necessarily debt that's a negative. It's debt that can't be repaid, and then you changing the currency underlying to pretend you repaid it. That is a real critical thing. So if you actually have to repay that debt, then you're borrowing from the future. You're just pulling forward demand. And if you did that, then growth has to slow in the future because you have to pay back that debt with interest. And it's pulling future demand from today's demand. So growth has to slow even more. So it's not necessarily the debt. Debt can be used. Debt is not a bad thing. It's debt that can't be repaid. And then governments distorting capitalism to pretend they're repaying it, changing the currency value.
Debt that can't be repaid. So when you look back to World War II debt, many people look back and say, "Hey, that was a good investment. We actually grew out of that debt. We paid it off via growth." You look at what happened, and you look at the percent of our national GDP in the States as it relates to financial services. After 1971, when we moved off the gold standard, it exploded. And when you look at debt leading up to 2007, 2008, so much of that debt was mortgage-backed secured. Basically, we get a loan for a higher priced house, which isn't actually higher price, but there's so much money it goes higher. Who is the fairy godmother in the system that says this debt is good, it's going to drive real growth and real incremental value to society versus this is bad debt, it's the financial services sector playing a game?
Connect to dots so you can see it. That's why I say the $4 to $1 of GDP growth. And it used to be $2, and it used to be $1, and it used to be... So at a certain point, debt is good. It's actually producing more. And then you have to pile way more debt to pretend you're getting growth, right? To get growth, right? But it takes way more debt. And the fairy godmother just all of a sudden went, hey, just like a business, right? You could pretend WeWork looks like a really good business when it's valued at $45 billion, and everybody says, wow, this is great, because it's a Ponzi scheme. More and more people racing in, and more people racing in, and then you take that away and you see the real fundamentals. Right?
Give a counterexample to WeWork. Where has it bring good debt over the past 5 years?
Well, so go back a little further. Amazon borrowed a bunch of money to create real value in their business, and the future cash flows. It was a negative working capital model, and the future cash flows and the growth of creating that platform is easily pay that back. But any single example that you take, as you add more and more debt to get no real look out at the future and say, can this debt be paid? You're already way past the point of rescue. And so your example with airlines or any of these others, which just all goes up to the federal government, which is really from the taxpayer. You look at the entire thing, and it's just a house of cards.
So let's shift another political question here. Preston Pish, the investor podcast, gave a great analogy. And I know you're in the same circles there. You guys probably have discussed this with him, but basically said, you know what? Really what quantitative easing is it's socialism at the top. Corporations get bailed out. But what's worse is it's capitalism for the SMB. Let them go bankrupt. If they can't make if the restaurant can't make the rent payment, let them go bankrupt. And they try and do like PPE and UBI to just kind of support the bottom. But right now it's essentially capitalism at the top, socialism at the bottom. Is there a way to make that more even where for every dollar of quantitative easing, it's an additional dollar of UBI or something like that? Can there be a balance like that?
I don't think so. And I don't think so because what that is 100% true. So right now, if a company cannot pay back the debt, it should go broke. And then people with money should recapitalize that, right? And create their wealth going forward. If a government stops that from happening, and it's politically friendly to do, or it gets worse and worse over time, but it's politically friendly to do because here's what that company does. I'm going to go broke. All these people are going to be on the street, right? And so the company is talking about jobs, right? And so the government says, those people can't be on the street. We're in trouble. So they say, okay, here, we're going to save you. But it's socialism for the rich. It's absolutely socialism for the rich because the jobs will go down over time anyways. But those jobs would still be there. Like if you said that, let's use the oil markets right now, right? And there's a ton of private equity debt against the oil markets. You can clearly tell that those markets are dead. That debt is zero. It should be zero. The oil still stays in the ground. If it's going to be worthwhile, worth something down the road, it's not that the oil is forever zero. It's the company that took the debt is zero, right? And by pretending it's not zero today and giving them, okay, we're going to bail you out and solve the debt with more debt. That sounds like a good idea, right? It's a really bad idea. So you save all of the executives that created essentially debt to create bad businesses or got hurt because of a bad business, and you stop capitalism from happening. That you should clear the system. That system should be cleared. New entrepreneurs should come in and take those assets and create their fortunes.
But Jeff, in 2006, the U.S. paid $390 billion for crude oil. Because of the fracking boom, we paid just $78 billion in 2016, saving American taxpayers $312 billion. We need those fracking jobs.
You're kind of making my point, right? So those fracking jobs will be there no matter what. The oil doesn't, at negative $37 oil. I'm
asking this facetiously, by the way. I want to give you a chance to defend. Yeah,
I know you are. Yeah, so the oil, if it's going to have value, entrepreneurs will rush in and create value out of that. It shouldn't take the government getting into that conversation to protect previous entrepreneurs that made mistakes. Period. Right. And when you connect the dots to letting Main Street fail, right? The entrepreneur with a restaurant that fails, everything else, and people saying, yeah, that should happen, but it shouldn't here. It's just illogical. It's completely illogical.
Let's stay on oil for a second because I want to get into solar because you did a beautiful job in the book of kind of correlating Moore's law to infrastructure, to oil, to energy, which are all important things. I'm going to do a hypothetical. These can be dangerous, so I'm going to do my best job to set this up appropriately. Next week, we see a headline that says U.S. government considering $100 billion bailout of fracking industry to save 3 million U.S. fracking jobs. If you were leading, as part of Trump's cabinet, the new infrastructure plan, and you were advocating instead to use that $100 billion to incentivize the deployment of solar cells, how would you structure that in a way that you believe would get the most or the largest percentage of the U.S. population kind of on your side and agreeing that's where $100 billion should be spent?
So the first point about technology, where it's moving, if you accept that, And first, I would have the debate about technology. I'd look everywhere and I'd say, is that true? Right? And everything I've done across, you see it in the book, but I try to be balanced in my approach on all of this. That is true, right? Technology is going to give more for less across your life, right? And it's going to continue, and it's going to accelerate. That I can't see any flaw in what I'm talking there, and I will gladly debate that with anybody. I'm at the front seat of it, so I see it happening everywhere. If that's true, then the only place to make investments is in the superhighways of the future, right? So before you would, if you wanted to get people back to work, you would get shovel-ready projects, right? And you would get people back to work on building roads and infrastructure as fast as you can. And by the way, U.S. needs some roads infrastructure. That is still true. But the roads and infrastructure were an important part of the arteries of finance to connect dots, right? And to make things happen faster. So if you built a bridge, then you get more, not just the initial GDP gain of building the bridge and everything else, but you're more efficient in your economy because people travel to work faster and everything else. That's historical. Now more efficiency comes from Zoom, right? It comes from owning the superhighways of the future, not of the past. And some of those superhighways are solar. Some of those superhighways are artificial intelligence. Some of the is compute power, but they're all technology related.
I could see you in that cabinet debate pulling a line from your book. I'm quoting now here. Folks, listen, using solar only to generate all the world's electricity today, you'd need 496,000 square kilometers. In the US alone, Trump cabinet, oil and gas covers 104,000 square kilometers. Why not just rip the Band-Aid off and make this? I mean, folks, why not just rip the Band-Aid off and make the switch? Let's incentivize solar, right? It's going to be painful. We're going to lose fracking jobs. But guess what? We'll be energy independent. That's good geopolitically, right? We'll have solar. Moore's Law will continue to bring the price of solar cheaper. Like, these are all good things. Why wouldn't people get on board with that?
You hope they will. Now, so just the transition, you know it in the book, and one of the things on podcasts you can't go as deep is some of the stuff in the book, and then there'll be a whole bunch of people questioning, well, solar can't provide enough power today, and they're right. So the transition to solar is really important, because you're not going to just tomorrow go from energy dependence on oil and coal and everything else to solar like that. But the transition, the people in front of the transition and the people that create the innovation in the transition will export that innovation around the world. And so the best, we're owning the future is the best. That transition is an important transition. That those investments of jobs, those jobs, they don't just carry the tomorrow gain, right? And get more people working. They build an infrastructure that people around the world will use that in infrastructure. So some of the technology that's created in solar.
Switching from solar energy to technology, but still talking about the future, many people, you just use the word owning the future. Many people are arguing, and there's two very different sides of this debate, that AI is going to play a massive component in, quote, owning the future. When you have companies like Google that can use their ad business to subsidize massive gains elsewhere, choose to launch free products for consumers, and then use that data to help their AI machines course correct faster, is that a good or bad thing for society?
Do I want AI owned by a corporation? Probably not. I would rather have AI general purpose or owned by a whole bunch of people. Do I want AI owned by a government? No, I don't. I would rather have the benefits widely distributed to society. But the incentives around a company to create it are so massive that it makes sense for Google, it makes sense for Amazon, it makes sense for So I don't think I said it. I'm from Canada. Some of the top AI researchers in the world are in Canada, and it's because the government when most governments were stepping out of AI research because they didn't believe in it. Canada's continued to invest in it. So some of the top people around the world moved here, but we haven't capitalized on the commercial value of AI. There is a sucking sound from all of our talent to the Amazons, the Googles, and everything else, because you can work on problems faster, right? It's around data capture and everything else, and so the top researchers go to some of these companies because they can solve problems faster, and that's because these companies understand network effects, how to capture data a lot faster. So that path, if you look at the amount of investment in AI and you compare what's happening to these massive companies, and include Alibaba and some of the Chinese companies in that set, I think it's over 60% of the dollars invested in AI are coming from the monopoly companies.
So again, what is your, for me, this is one of those things where I'm not trying to tee you up with a yes or no answer. I am actually trying to consume as much information here to understand where I personally lay on this. But you have, folks like Elizabeth Warren saying these companies are too big, break them up. But the problem is the profits from how big they are, a lot of are sinking into these new things like AI. When you say you'd prefer to see AI owned and the power of that distributed from the masses, what is a plausible way where you could see that work?
Well, that's the thing, and I think it's hard to see plausibly that working right now, because of the incentive structure for a company to win, right? And so you could have a benevolent kind of AI and say, but you don't have any incentive to create the data. You don't have any incentive to create the so it's hard to see, and it's hard to see governments actually stop. Let's use an example from the book. If Elizabeth Warren or anybody breaks up Amazon or Google, or the giant AI companies, or Microsoft for that matter, effectively by doing that, you cede AI superiority to China, right? Because the rate that this is moving. So I don't think that would be a really smart idea. Either it's geopolitical, and the whole Huawei thing is a geopolitical thing around AI. It's not, and it's so important to kind of sovereign nations.
You're talking about data transfer over 5G, and if Huawei owns that, we're cooked.
Exactly. And so I understand I understand the politician's response. I understand that. How do I slow that down while I move forward here? Some of those conversations are probably the most important from a geopolitical landscape.
So China has used government power to centralize this, and then they're building amazing social mapping features, 200 million cameras across the country. They're building the muscle to process this data faster than what might rival Google or Amazon as private entities. There's another faction of people that would argue exactly what you're selling, which is a decentralized nature of this utility works perfectly with blockchain technology and decentralized applications. Jack Dorsey has talked about making Twitter and turning it into a DApp. The problem and the question I keep wondering, I like that path a lot, because it would basically mean every bit that you and I, every piece of data you and I as consumers commit to the AI machine, we earn a little bit more of the value of the system, the network effect. But what capital provides what is the capital that provides incentive for anyone to build the machine to process the data we're inputting if you went the DApp route?
That's the problem. And even on the DApp route, we think about these as waves as far as technology. Remember when the internet was going to be the great equaler, right? It would give everybody access. It would create diversity. It would hurt monopoly companies, right, by giving everyone access. That was kind of the promise, and for a while that actually was true. A whole bunch of new Florida companies, but it actually just concentrated power faster, right, because of the network effect. And so you go through these waves. You break things up, and then it goes and consolidates. But that's actually from a human condition. We can't handle as much choice, right? You go to Google and it handles the choice for you, right? So it indexes 130 trillion sites. You don't go to page 572, even though the content is actually there. You never go to page 572
unless you are one bored individual,
because you don't have the time. And so what these gating mechanisms, monopolies, really do, they solve that choice for you through AI, and you go to the first page and you trust their you trust their search. So even if you now break it back apart, somebody's going to sit on top and consolidate it back.
So just wrapping up our conversation on AI, I haven't heard I think this is what, you've said what you think should happen, but you've said the problem is who's going to spend the money to build the infrastructure to process all the data input. Is that the extent of your thought process right now? Do you have a solution there? Like, what's your best solution?
So a solution there, I don't have off the top of my head, what does AI look like? And it's because there's such thorny problems, right? AI, the rate of AI progress, it's moving so fast that our intelligence, my intelligence against AI, I'm going to lose the battle, right? The most intelligent of us have always read more, consumed more, learned more, curiosity, everything else. I read 50 books a year. And have since I was 20 years old. You can't read enough to move as fast as AI is moving. It's just we don't have enough energy, right? We don't have, for us to retain that. We stop retaining, right? We can connect these patterns, but we have to practice more and more to become really great at anything. And you see this happening in AI at a speed that is blinding, right? That first AI beats chess, then it beats Go, then it's going to drive a car.
Which Go, by the way, is significantly more complex in terms of permutations than chess.
Exactly, right? Significant, like significantly more. In fact, the top AI researchers didn't think Go would be solved for another 5 years, and then AI blows it away, and then the same AI that beat Go is created without knowing the game, and so with all the researchers, then the new AI beats that AI, the first AI. And kills it. The rate of this progress, and it leads to a logical conclusion of, if every single job is a function of our intelligence, and AI is going to be more intelligent than us, where do all the jobs come from?
Do we need jobs in the future?
Well, that's kind of what I propose. If you let deflation happen and let the natural order of things happen, you'd need far less of them. You'd work less. You would you would follow the trend, and you'd be less work along the trend. And I don't see why that would be a good or a bad thing. I don't see why people are fighting that so badly, right? Because if you just follow the trend of technology, we would have more time. Right, we would get more for less, as the natural order of things was permitted. But that butts up against the existing way we've wired the world.
So if you fast forward, you or I are president, well, maybe me because you're a Canadian citizen. Let's say I'm president. I'm giving the State of the Union in 2036. Almost all State of the Unions throughout history, they start off something like this. Our economy is growing. We're doing very healthy. Unemployment is, continues to shrink. We're now at 3% unemployment rate. Does that State of the Union in 2036 sound something more like the following? Folks, gas is now 90 cents a gallon. So many of you have been able to work less. You're now on 2-day work weeks. You have more free time and you're making less, but you can now afford to go on more vacations because you can afford more gas, and airline tickets are cheaper. And going out night to eat used to cost, $100 on average for a family of 5. Now it's $50 for an average. Is that what the State of the Union sounds like in 2036?
I think it would be better than that, but I think you should run for president. Yeah.
My point is, how do you sell purchasing power? Purchasing power is a $1,200 stimulus check is easy to see. To sell purchasing power gains to the American public is harder to explain.
Do you know the marshmallow experiment, marshmallow test, 4-year-old marshmallow test?
Oh yes, but say it back to everyone.
Yeah. So at 4 years old, you can predict the success of kids into the future out of leaving them or giving. A researcher comes in and says, "Here's a marshmallow. If you don't eat it by the time I come back, I'll give you another marshmallow." The kids eat the marshmallow. If you project them forward, don't do as well as the people who delay their gratification and don't eat the marshmallow. And what you just talked about is it's really easy to eat the marshmallow, right? It's most successful entrepreneurs, most successful investors can delay the current gratification because they see a future that is better, so they get 2 in the future, or they get more in the future by taking pain today. That's a hard thing to convince politicians to do. It's a hard thing to convince people to do because they want what's right now.
We're on 4-year election cycles.
Yeah, here and so it might be political suicide to say what I'm saying, right? It might be, but it doesn't make it not true. And that's the thing. At some point, people are going to rise up and realize this case, and they're going to do it through a disorderly unwind where new leaders are going to be elected, and I hope it's not that. Right? Even in Bitcoin, right? So a lot of people on Bitcoin, and I'm a huge fan of Bitcoin, because I think that it'll move to a reserve status. That other currencies will be pegged to eventually.
When? What year do you think that happens?
I think it could happen faster than people are projecting. I think because what's happening right now.
Give me a range. 5 years, 10 years, 20 years?
Faster than that.
Faster than 5 years?
Yeah.
Wow.
Because once it starts, it'll accelerate, and that network effect will drive it super fast. Now, it's the same, but so Bitcoin versus gold, right? It's not that gold, like, why is gold valuable, right? And it's because it used to be tied to money, as you said, pre-71, it used to be tied to money. And so you have, $8.5 trillion market cap, something like that on gold. Not because of jewelry, because it used to be tied to money, and people think it might be tied to money again, right? So it's a hedge against eroding currency values, and that's why it's going up again, and it probably will go up higher from here. But if you look at Bitcoin at $120 billion market cap, I think it looks more like the future of money. Like, I think it's I can't imagine central governments saying, okay, let's go back to the gold reserve. Mm-hmm. But I can imagine them saying, okay, what do we peg to that is a foundation of trust? And I think that might look more like Bitcoin. And if one does, or if one starts accumulating behind the scenes, they all have to. It starts to move really fast.
Curious if you put kind of money where your mouth is. Preston shocked me with his answer on this. I want to ask you though, we'll talk in percentages. Obviously, we don't give up information about your net worth, obviously. But when you look at your personal kind of exposure, you have kind of U.S. equities, you have assets, you have anything related to fiat, then you have kind of these, gold, then you have, Bitcoin and things like that. What % of your personal kind of net worth pie would you say is exposed to Bitcoin?
10%.
Interesting.
And I read, this isn't coming from me, but I read this and I thought it was really profound. You build wealth by concentration of risk, right? You also could lose it all, but you protect wealth by diversification. So if I wanted to have higher risks, and that's what an entrepreneur does, right? So all of a sudden, all of their business is in one thing, and if they're right, they build massive wealth. So concentration and then diversification to protect it. So if I was in a different spot in life that I would needed to build a bunch of wealth, I would make a way bigger bet on Bitcoin.
You would have actually potentially 100% concentration in Bitcoin.
Maybe not 100%, but I would have a way bigger bet than 10%.
And by the way, when you're talking bet, I'm not talking speculate when it's go from 7,500 up to 8,500. I'm talking actually building network infrastructure around enabling blockchain and Bitcoin to grow.
Yeah. I would, if you know that currencies are going to be devalued, right? Then you could either bet on a whole bunch of companies. You could try to pick the winners of the currencies that are going to be devalued in different markets, whatever that devaluation.
The ones the government will save.
Let's say I would bet on Amazon today because it experiences a network effect. It takes care of a digital trend, right? That's accelerating across, and they have a whole bunch of opportunity to keep going, probably faster now. I would bet on Microsoft today. I would bet on some of the big parent, but even making that bet, I know I'm betting on them in a currency the currency is going to be destroyed at some point, right? So the currency value, so the thing I've made the bet on is going to be destroyed. It sits on top of a currency that at some point it'll be destroyed. And so that's a hard bet to make long term. If you know, like, would you bet on a currency in Africa or Venezuelan currency or a company there, right? Because it was a great company and the currency gets destroyed, right? You get destroyed anyways. So that's kind of the point. At some point, if the currencies blow up, which I suspect at some point they're going to blow up, then some of the companies, they'll do well in that currency, but they get hurt. And Bitcoin is a hedge against that. So if the currencies get destroyed, then Bitcoin probably is a winner against that.
And so the audience is naturally thinking, Jeff, enlighten us. When does the destruction happen? Lindsey Graham, just this morning, this is some interesting stuff, saying we should potentially default the U.S. government on the $1 trillion of debt that China holds of U.S. treasuries. Is that what destruction looked like? Is that the bomb?
Yeah. So that's one of the, because already that's happening, right? So that's what all over the world, global trade has really been a mug's game around. So once every country has its own currency that's devaluing to try to get higher jobs, and every currency is doing the same thing, you can't have trust in global trade anymore. Because let's just take, it's simple if you see it as an example. You and I, right? You loan me a whole bunch of money. We're trading, right? I'm in Canada, you're in the US. You loan me a whole bunch of money and you're buying my goods and everything. I'm loaning you money. You're buying my goods. And then at some point you say, I'm not going to pay you back the loan. Or like what Lindsey Graham just said, right? Am I going to trust that trade relationship anymore? Or am I going to trust your currency anymore? No, I wouldn't. Or the opposite, or I'm going to change the value of the underlying currency and pretend to pay you back, but I'm going to pay you back in worthless pieces of paper, right? On both of those things, the framework of trade and the framework of trust and services back and forth between you and me or anyone just keeps breaking down. That's where we are in this cycle. Mm-hmm. Not much governments can do about it.
So if you argue, I really see three options: a new Bretton Woods. Hopefully the US dollar ends up winning and it's not like some other currency, because we have a lot of power because of, I'm talking we obviously as Americans, but you guys are close to, right? New global reserve. Some would argue, and it's a stretch, SDR, monetary fund. It's a basket of currencies essentially. And then the other one is, we've talked about it, digital currencies. Which of those three options over the next 10 years do you think gains the most traction?
So that's why I don't believe in any of those options actually works.
Okay.
And because governments are unlikely to trust each other in this current environment to be able to create that.
To negotiate a new Bretton Woods.
Bretton Woods. And that new Bretton Woods, the US dollar was pegged to gold in Bretton Woods, right? And when everybody understands the rules, everybody wins, right? Game theory predicts better outcomes for everybody. But if you fast forward kind of to where we are today, do you think in governments around the world could come together and actually have that discussion? And what would they peg it to? Right. That's the point. I think in that world, I want that to happen, because that would be the only way we could actually have a non-disorderly transition.
And peg it to what? A digital currency?
I think it would be pegged to a digital. I think it would be pegged to Bitcoin. I think that's what. I think that's the most logical thing right now. And every government will say, "No, peg it to my digital currency," but it doesn't. But whether it's a digital or a piece of paper, if you can manipulate the rules on that piece of paper or digital currency, then nobody's going to want to peg it to anyone else's currency. Right?
Exactly. So there's no incentive to make that new Bretton Woods, instead of being tied to gold, tied to Bitcoin. There's no incentive to actually make that happen.
Yeah, and so the disorderly unwind, and think about and this is what I was saying with Bitcoin holders. As much as I believe in it, I don't want it to happen as fast as it likely is happening, because it means the world goes through a disorderly unwind, and that doesn't look good for even people with Bitcoin.
Paint that picture for us.
Well, if currencies. Think about what happens when currencies explode because the U.S. hasn't seen it, right? It's hard to see, but look at it in Germany before Hitler, right? Look at the Weimar Republic. Essentially, a currency becomes worthless, and you have wheelbarrows full of currency to try to buy bread, and you have people starving, and you have people and politicians in those environments rise up and they blame others, right? That's what ends up happening and so a whole lot of people would go hungry and jobless, and it would just and yes, there'd be wealth created in people with Bitcoin, or protection of wealth in Bitcoin, but against that magnitude of damage in a society, it wouldn't be a good. That's not a utopian future. It would be a dislocating for society.
So a couple more minutes here. I want to pull that thread for a second. World War I, to make sure Germany stayed kind of knocked down, there was obviously a massive agreement, Treaty of Versailles, and a massive amount of war reparations that Germany owed. And there are many people, ex-commanders, some influential, some writers, that would be like the equivalent of today, like a big blog site, that were really upset that Germany gave in instead of fighting to the last breath and accepted that consequence. Ultimately, they try to get out of that by printing way too much money to pay the reparations, and you can't pay that much debt. So then Hitler rises and populism happens.
There's one step that you're missing there. So that happened through the 1920s, right? Mm-hmm. And it happened with U.S. and everything, and around the globe, giving loans to Germany.
Okay.
So that they could. So Hitler was rising through the 1920s. Right through the 1920s, and he actually went to jail in that time, and he actually became kind of less relevant in the 1920s because the economy grew again. Mm-hmm. The economy grew again because the U.S. and other nations put debt in to be able to create that. In the 1930s, in the early 1930s, U.S. had called their loans, right, because U.S. is experiencing pain, and Germany couldn't pay the loans. And so the only way to pay them was to print money like it's going out of style, right? And then paying back. Remember the conversation you and I had about you and I trading? So print money and pretend to pay back in a different inflated currency. But that killed their economy. Asset owners won, right? Everybody else got killed. the asset owners, just, I don't want to say, but think about who the asset owners were in society, and think about the politicians that came in and said, it's not your fault. It's those people's fault that took your money. Right. And those people then are persecuted. Right. And once you've done that job, you need to create a bigger enemy. Right. That's why war or revolution is a logical consequence out of where we are right now, because people don't believe it's their fault. They're caught in a system. And it's really easy to prey on people's vulnerabilities when they can't eat and create an enemy out of somebody else.
Populism, and you argue this in the book, explodes because of an unjust system. The problem is the definition of unjust can be manufactured. Fear is profitable because it's free to create.
Yep.
I don't know if current governments know they're doing this on purpose, but let's assume they did. Let's assume that they knew if they print more money, it creates a larger gap between have and have-nots. And like Art of War, when we read it, divide and conquer is a real strategy, and it can work. They know by printing money, they can continue to divide and conquer. Why would they ever stop or give up that power?
So that's why revolutions happen, because when you do that for long enough, smaller and smaller people are at the top, way more people on the bottom of the pyramid, and the people on the bottom of the pyramid say, I'm taking it back.
What does that look like, though?
Pitchforks in the street.
Literally.
Except for not pitchforks. The U.S. gun sales are through at all-time records in the U.S. and Canada and around the world. I hate talking about this. I wrote the book so that, and think about when I wrote the book.
Which was what year?
I wrote it through 2018, end of 2018-19. So okay. Released in January of this year. But it predicts all of these events, and it predicts the next ones too, right? I wrote it that we could see. Hopefully, smarter minds could prevail. We could talk about the first principles and say, if this has created a structural change in society, it's a structural change like the Blockbuster Netflix example I gave. And putting candy aisles in the shop won't fix it. It's so let's talk about how we create a better, more fair society going forward. And that looks very different than what's happening today.
I don't remember the name of this off the top of my head, but there were a bunch of people that camped out after the banks were bailed out in 2008 in New York. What was that for, like weeks and weeks? Do you remember what that group was called? Everyone knows what we're talking about, though. Yeah. But so here's what's interesting, right? Democratic president. Today, if something like that happened, you would immediately launch something like UBI to tell those people in tents outside, protesting the bank bailout, we're going to give you $1,200 this month. Like, go away, stay happy. Don't question what we're doing. This government is a little ahead of it, and they probably know that. So they've been able to keep control of the masses that might revolt with pitchforks by introducing things like, here's a little carrot, take a little check this month. Isn't that a great hedge? I mean, when does that balance stop working?
So at what rate? So just let's take the structural things that you just said. So I'm going to bail out a whole bunch of companies that should fail, right? I'm going to do that. And at that level, it's a staggering amount of capital that's going. We both know how much capital it's going to take to create
tens of trillions.
Tens of trillions of dollars. Globally more. Right?
Yep. it's hundreds of trillions globally.
But in the US, tens of trillions of dollars to prevent that from happening, to prevent them from failing, and to artificially keep their prices high. Their stock prices high, their prices high, artificially keep the commercial real estate on them high and everything else too. And then at the same time, because I've kept them artificially high, I have to take extra money and I have to give it to a whole bunch of other people to pretend so that they can pay for all these high prices, right? At some point, the system it's just such a colossal waste of money on both fronts, and you can't You can't keep doing that. I'd love for somebody to explain to me why that's a good idea, instead of arguing why the other point on why don't we let nature take its course and deflation. I'd love for somebody to say why what we're doing is a good idea. So, but you're doing this right now. Preston is doing this. There's a whole bunch of really smart people having this conversation and driving this conversation to way more people who are starting to ask really logical questions.
Yep.
Right.
I mean, look, I'm trying, but ultimately where I lose confidence in change happening is ultimately in the US, the election cycle is 4 years. You can print money to get even reelected for a second term, the second 4 years, give out UBI, like that pattern you just articulated where prices keep increasing so much, you can't write enough UBI checks to keep up for consumers paying for a bottle of Coke. And that will last longer than 8 years. So you're passing the problem on to the next president. And if you can pass the buck, you're not incentivized to the politically uncomfortable thing today of let deflation occur, let less people have jobs, and let prices go down.
All true.
Yeah. There's no good answer.
There is no good answer. But you hope that this conversation starts to permeate a whole bunch of people. Better questions are asked, and through those better questions, you're electing different leaders through that. Because we might as well face it. It's a reality, and papering over that reality, it just makes it worse.
Guys, that is the price of tomorrow. Jeff Booth, why technology is the key to an abundant future. Coming from a guy that isn't just writing about it, actually built a company called Build Direct over the past 19 years, $500 million market cap, grew it nicely. Now trying to get this message out for his kids, ultimately to prevent a very nasty, probably very bloody revolt. We hope the good things happen. Jeff, if people want to follow you more, where can they find you?
On Twitter, at Jeff Booth.
Guys, and all of you watching on YouTube, I will be in the comments after this. I'll tag Jeff if one is directed at him so we can get in there and keep this conversation alive. Jeff, thanks so much.
Thanks a lot.
There you have it with Jeff Booth, author of The Price of Tomorrow. I kept asking him for what the solution is, and he just said, Nathan, again, you guys heard us talking. We couldn't come up with a solution. If you guys have one, please put it in the comments. We are watching, we are reading, we are trying to figure out when this debt, all this money being printed, when does it bite us all in the butt? And when does something like Bitcoin or the SDR or something else take over to build trust back in the economic system? Or when does the revolt happen? We really obviously want to prevent that. So again, we'll be in the comments all day today. If you enjoyed the video, click the like button. In the meantime, be sure to subscribe to our channel by clicking my face right up here, or pick one of these other 2 interviews to watch next if you've got some more time on your hands. Guys, I appreciate you. I hope you're enjoying these longer form interviews I'm doing. I'll be in the comments below for any questions. Thanks.